On Business Incorporated today. Aviation unions strike and disrupt services at major airports in Nigeria. Petrol prices increase in Ghana. And we'll look at some highlights from the spring meetings, especially as it concerns African countries. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Well, let's get to it, starting with the market. As usual, we start from Nigeria, where we see that bearish run continue as the market deepens its losses. It closed in the negative last week and continues on this first trading day of the week, especially looking at the intraday. It's down 0.04%. Also in South Africa, the market is down 0.08%. In Egypt, no trading today, but we have that major positive close from the 13th. That's on Thursday. It closed 5.55% in the green, and Kenya also closed negative, though, 0.30%. We move to the Middle East now to see how that market is doing, and it's good news for most of the market there. Abu Dhabi is in the green, 0.05%. Dubai also 0.51% in the green, and even much better is Saudi Arabia, 0.88%, while Qatar is the only negative in that market, 0.56%. Let's leave these shores now and go over to Berlin in Europe. We see that the world's largest industrial trade fair has kicked off in full force in Germany, and 4,000 businesses are participating. The Hannover Messe is looking to return to a time before the pandemic. Well, but this, of course, has attracted some criticism. But let's get the details of that. Cassandra Hunt joins us in Berlin to give us details of this and a whole lot more. Hi, Cassandra. Good afternoon. So tell us about this very big industrial fair, and so many companies and businesses participating. But of course, this has not stopped that criticism. Tell us about the Hannover Messe, which is brewing this criticism from this event.
Thanks for having me. Yes, the Hanover Trade Fair opened its doors again with the help of German Chancellor Olaf Scholz. Now, during the pandemic, it closed down for the first time in its history in 2020. In 2021, it was all online, and last year we saw a hybrid format. So organizers are really hoping to get things back to usual this year. 4,000 exhibitors from 63 countries are in the German city to show off the latest and greatest in the electrical, digital, and engineering industries. Some big things that this year that the exhibitors will want to show off is how artificial intelligence and metaverse technologies can help solve problems that are facing the global economy. But this year's trade fair is taking place against the backdrop of a labor scarcity, which Germany has tried to address with a new so-called opportunity card for immigrants with the aim of attracting more skilled labor to the country.
Yeah, and of course, there's a lot of conversation. We did talk about the issue of criticism. What is some of the main points of the critics?
The business community has been laying on the criticism pretty thick recently, saying that Germany is becoming less attractive for business locations due to high energy prices, excessive bureaucracy, and lengthy approval procedures. Now, the energy price problems here are still some fallout from the Russian invasion of Ukraine and how that has shaken up global energy markets. But Germany specifically was heavily dependent on Russian natural gas before the war. Now, the head of the German Electrical and Digital Manufacturers Association called on politicians to provide more support for what he called innovation and to decisively reduce bureaucracy. He said that on one hand, while companies have dramatically become more digitally competent, on the other hand, for the government side, overregulation and overly detailed requirements are representing a burden that is, quote, almost impossible to bear, he emphasized, especially for small and medium-sized enterprises. Now, Chancellor Scholz, who was in attendance, seemed to agree with some of those sentiments, saying we need less bureaucracy and faster options.
Well, less bureaucracy. I think it's every country needs it, but there's always that need to balance it out. But let's look at the market now and see how all of this is fitting into the markets at this time.
Well, European shares rose sharply on today's opening. Investors are betting on big U.S. banks continuing to post strong quarterly earnings results this week. They're also hoping for an end to the Federal Reserve's rate hiking cycle. Some notable figures so far this morning. The Pan-European Stock 600 edged 0.3% higher after hitting its highest in over a year last week. Meanwhile, the blue chip Stocks 50 index hit a 22-year peak. But investors are going to be closely monitoring a slew of earnings reports due out today from the likes of Goldman Sachs, Morgan Stanley, and Bank of America.
Thank you so much, Cassandra Sons, for giving us updates from that, and wish you all the best in that trade fair that's still going on. Well, talking about the markets, we move to other part now, but sticking with the market, Asia Pacific traded higher on Monday as investors looked ahead to another major earnings week on the Wall Street, including the likes of Charles Schwab, Bank of America, and Morgan Stanley. Let's take a look at the numbers now. That's for Asia. All right. So Nikkei 225 is in the green, 0.07%. Shanghai Composite almost 1.5 in the green at 3,385.61. Hang Seng Index looking even better, 1.68%, 20,782.45. The Kospi, it's a green market for the Asian traders at this time. And Australia also follows suit, 0.27% in the green. Well, the quarterly earnings report would shed light into the overall health of the financial sector in the United States following the collapse of that Silicon Valley Bank. Remember, that moved a lot of banks in other economies. Well, economists expect to see a 4% rise year on year for the first quarter of 2023, higher than the final quarter of last year. And that will mark the biggest rise in nearly a year. And with all 11 sectors in Australia finishing at the week higher as well. Okay, looking out to other markets now, we go to the United States. Stock futures were flat on Monday with investors preparing for more quarterly earnings. Even in Nigeria, quarterly earnings are determining the sentiments in the market, where futures tied to the S&P 500 gained 0.14%. Nasdaq 100 futures notched down 0.15%, and Dow Jones Industrial Average futures ticked up 30 cents. Those are the numbers there. Dow Jones in the green, S&P 500 also in the green, Nasdaq for the techs not looking good, 0.08% in the red. Well, let's go to global oil now, see how that is trading. Oil prices were steady on Monday as investors eyed Chinese economic data for signs of demand recovery in the world's second largest oil consumer. Brent crude futures notched 8 cents lower at $86.23 a barrel. U.S. West Texas Intermediate crude was at $82.33, and that's down 14 cents, 0.2%. Both contracts notched their fourth weekly gain last week, the longest such streak since mid-2022. The release of China's first quarter gross domestic product data this week is expected to be positive for commodity prices, with the International Energy Agency forecasting it will account for most of 2023 demand growth. The data are due to be published later on tomorrow. However, the IEA warns in its monthly report that the output cuts announced by OPEC Plus producers risk exacerbating an oil supply deficit expected in the second half of the year and could hurt consumers and a global economic recovery. Further tightening supplies, oil export from northern Iraq to the Turkish port of Ceyhan remain at a standstill almost 3 weeks after arbitration case ruled Ankara owed Baghdad compensation for unauthorized exports. Rising costs for Middle East crude supplies, which meet more than half of Asia's demand, are already squeezing refiners' margins, prompting them to secure supplies from other regions. Refiners are also ramping up gasoline output ahead of peak summer demand, while cutting diesel production amid worsening margins. Meanwhile, earnings from U.S. companies could also provide clues to the Federal Reserve's policy path. The greenback has been strengthening alongside interest rates hikes, making dollar-denominated oil more expensive for holders of other currencies, and traders are betting that the Fed will raise its lending rate in May by another 1/4 percentage point and pushed out to late this year expectations of a rate cut, as typically occurs in a slowdown. We're still doing market now. Let's head to the metals market. Gold rose on Monday, but prices were off a one-year high that it hit last week as mixed economic data prompted investors to reassess the U.S. Federal Reserve interest rate hike trajectory. Spot gold was up 0.2% to $2,007.76 per ounce. U.S. gold futures also rose 0.3% to $2,021. Gold is likely to trade with positive bias, but can see some initial correction. A major downfall in prices is not expected as uncertain global economic and geopolitical tensions support its safe haven status. Gold dropped 2% on Friday after data showed resilience in United States core retail sales in March. Other data showed households expect inflation to rise over the next 12 months. Separately, production at U.S. factories fell in March, but eked out a modest gain in the first quarter. Well, gold also maintains a strong correlation with real yields, and price action continues to be sensitive to United States inflation and employment data. On Friday, Fed Governor Christopher Waller said that U.S. central banks need to move, need to move interest rates higher still, while Atlanta Fed President has said that one more 1/4 percentage point hike can allow the Fed to end its tightening cycle. The spring meeting has ended, but conversations from that spring meeting is dominating the news space, especially for countries like Africa, countries in Africa, with the issue of debts, debt restructuring, the issue of inflation, which also affects, of course, the Western countries. But resurgent Ethiopian returned to Washington this past week for that spring meeting of the World Bank and IMF with a message that the country is open for business after last week's ceasefire ended 2 years of war in Tigray. On the heels of a positive IMF visit from the 27th of March to the 7th of April, Ethiopian financial authorities held preliminary talks to borrow around $2 billion from the fund, and the loan would help close a $6 billion funding gap until 2026. African countries are among the hardest hit by excessive debts, hindering their ability to invest in critical areas such as healthcare, education, and infrastructure. But this not only perpetuates poverty and inequality, but also undermines global efforts to achieve sustainable development and address the climate crisis on the continent. As of June 2022, according to the Auditor General, Uganda's public debt hit 86.6 trillion shillings. In reaction, the Bank of Uganda said external debt servicing will at least cost $1 billion. That's about 3.7 trillion shillings every year in the 2 to 3 year, against a shilling of 49.9 trillion budget for the full year of 2023-2024. In Nigeria, well, that's a wrap-up of the spring meetings by IMF and World Bank. There are recommendations by the institutions for countries to diverse reactions. And one is the issue of increasing the tax net in Nigeria. Earlier today, we had Mrs. Iyabo Marshall, the head of Secretariat and Director of G24 in Washington, D.C., joining our Business Money show, and she reacted to this, asking that increasing the tax net does not necessarily translate to raising taxes, as some have alluded. She was on our show earlier today.
The increasing the tax net is not the same as increasing the tax rate. When you look at the numbers from Nigeria, if we look at the corporate income tax category, for example, the statutory rate is 30%. And in many countries, it will hover around be anywhere from 25 to 35%. Now, that is a statutory rate, but when you look at what is actually being collected and you kind of come up with how much that means, what percentage that means, it's actually around 4%. So in other words, there's around 26% that is not being collected. So when recommendations are given about tax collection, it is about a country improving its tax collection framework so that it can collect more taxes than it is. That has to do mainly with the efficiency of the system. How efficient is the system in collecting what is due? Collecting what is due obviously involves fighting illicit financial flows, which is draining a lot of resources out of the country, and combating aggressive tax avoidance and evasion.
Well, having a more efficient tax collection and monitoring system, of course, is one thing that looks obvious that Nigeria actually needs. And we know NECA had reacted the other way concerning that notion from the IMF. But in the days to come, we'll certainly have more on that conversation. Let's take a break now on Business Incorporated. When we come back, we still have other stories for you, beginning with that aviation strike going on in major airports in Nigeria. It's right here on Business Incorporated on Channels Television. Welcome back to watching Business Incorporated here in Channels Television. We begin from the aviation sector in Nigeria. Domestic and international airlines may be forced to cancel their flights as a coalition of aviation workers down tool in protest against what they say is the government's failure to address their concerns regarding national minimum wage, consequential adjustment and working conditions. The unions, which include Association of Aviation Professionals, the National Association of Aircraft Pilots and Engineers, National Union of Air Transport Employees, and Air Transport Service Senior Staff Association of Nigeria, had notified the public of a 2-day warning strike if their requests were not met. The unions are expected to stall transactions today and tomorrow, Tuesday, the 18th of April, as part of industrial action.
Well, today at the airport, like the 4 unions in aviation had informed the public that they are going to put a warning strike this morning, and it's going to last for 2 days. That is today and tomorrow. So they have commenced the warning strike. And I think maybe the government was unable to convince them not to start this warning strike. So they embark on it this morning. Well, they are asking for conditions of service that have been negotiated for quite a while and has not been implemented. Some are asking for promotion. So basically, most of the government agencies are the ones involved in this. Definitely by labor laws, after 2 days of warning strike, they definitely must go back to work, probably for another 7 days. If nothing happens, they could embark on full-scale strike to press for the implementation of whatever has been agreed.
I do hope that that full-scale strike could be averted and the government will have talks with the unions. Well, let's head to Ghana now. President Akufo-Addo has signed into law the 3 new tax bills recently passed by Parliament. The 3 new taxes are the Excise Duty Amendment Bill 2022, the Growth and Sustainability Levy Bill 2022, and the Income Tax Amendment Bill 2022. Majority in the Parliament has said the measure formed part of moves to raise 4 billion cedis annually in revenue. Well, still staying in Ghana, prices of petroleum products have shot up at the pumps from today, the 17th of April 2023. This is the first increase since the introduction of the much-touted gold for oil policy. Leading oil marketing companies, Goil, Total, and Shell have all increased prices of petrol and diesel. Goil is selling petrol at 13 cents plus 10 per litre. Diesel is about 12 cents per litre, while Shell is also selling a litre of petrol at 13 cedis per litre, while diesel is going for 12 cedis 99. Total is, however, selling both petrol and diesel at 13 cedis 20 per litre respectively, while Star Oil is selling both petrol and diesel at 12.69 per litre respectively. We'll go to Uganda now, where the economy grew 6.8% in the first 6 months of 2022-2023 fiscal year. And that runs until the end of June. That's up from 3.7% in the same period of previous fiscal year. Growth was mainly driven by the services, agriculture, forestry, and fishing sectors. The East African country is on track to achieve a growth rate of 5.3% for the whole fiscal year, helped by easing inflationary pressures. Uganda plans to start pumping crude oil in 2025 from fields in the country's west near the border with Democratic Republic of Congo, hoping that that will boost economic growth further to more than 7%. In Tanzania, the government of the African Development Bank and the French Development Agency, AFD, have signed agreement for 2 development projects loans worth $300 million. The funds will finance the construction of 87.8 megawatts Kakono hydropower plant located in Kagera region in the northern part of Tanzania. The project also received a grant of €36 million from the European Union. Tanzania is dependent on hydropower and thermal power plants, mainly gas-fired, for its electricity supply. However, it has considerable untapped renewable energy potential to meet its rapid growth while taking a low-carbon path. A coalition of development partners are financing the Kakono hydropower project, intended to increase renewable generation capacity and reduce hydrological risk via a dam located on a new watershed that is less affected by drought. The signing ceremony, which took place last week, and the project will serve 4 million people and increase the service coverage rate by around 7% of the population, is expected to have a major impact on the economic development of this rapidly growing zone, which lies at the heart of Great Lakes region. Well, in Egypt, a total of 246,100 residential units were built in Egypt during the full year 2021-2022. That's a 36.65% decline over the previous year, according to the Central Agency for Public Mobilization and Statistics Bulletin of Housing. The new units were built at a cost of 143.5 billion Egypt shillings. That's about $4.64 billion. In full year 2020-2021, 336,300 residential units were built at a cost of about $4.85 billion. That's about 150 billion Egyptian dollar. Among the units built in full year 2021-2022, 69,800 were middle class, 13,800 were upper middle class, and 22,600 were premium. Well, that's a wrap on the program today. Thank you so much for being a part of it. We do have 4 more episodes this week, so do join us for that. I'm Ini John Mekwa. Enjoy the rest of your day.